Hi guys, for this visual lesson, we're going to discuss solving problems on business and consumer loans under your General Mathematics from Quarter 2, Module 12. I'm your subject teacher, Arvin S. Enriquez. Our lesson objective: at the end of this visual lesson, you are expected to solve problems on business and consumer loans, amortization, and mortgage. So when we're talking about your amortization, so we can say that this amortization is the action or process that we can reduce or paying off a debt with regular payment. So that's what we call amortization. Again, it is the action or a process in which we can reduce or pay off a debt with regular payments. Now, with dealing with your mortgage here, so we can say that your mortgage is a legal agreement by which a bank or other creditors lends money at interest in exchange for taking title of the debtor's property. So we need to satisfy the following conditions. So with the condition that the conveyance of title becomes void upon the payment of the debt. So that is how we define your amortization and mortgage. No, now with this module, we're going to align this amortization and mortgage in solving problems. No, dealing with your business and consumer loans. Now let's deal with solving problems on business and consumer loans. So let's start with this module with this paragraphs, with two paragraphs here in this slide. So in your previous lesson, you learned about the basic concepts of business and consumer loans. Yes, it is from our previous modules. We learn what is the concept of business, or what is the difference now between your business and consumer loans. So in that module, you were able to learn the definition of different terms such as consumer loans, business loans, collaterals, etc. So in this module, you are going to expand and apply that knowledge in solving real-life situations concerning business and consumer loans, specifically amortization and mortgage. So with this module, we're going to focus on the concept of your amortization and your mortgage. So this may seem new to you, but as you go along through this module, it would be easier for you to sense that the contents of this module have wider applications in our daily lives. So basic definitions of amortization and mortgage. So as well as mortgagee or mortgagor will be tackled in this module. So problem solving that entails the calculation of mortgage amount, your total amount of interest, your monthly payments, outstanding balance are just some of the keywords that you will encounter in this module. So please do relax and focus, and who knows, you may be able to use this in a not so distant future, especially when you're under ABM, or if you want to have some businesses, in the future. You can use the concept of this business loan and consumer loans plus the concepts of your amortization and mortgage. Now, the lesson and activities in this module will explain what you have to know, what real-life situations concerning consumer and business loan. So, this module will enlighten us, about the real-life situations and the real-life applications of these consumer and business loans. Now, moving forward with what's in. So in your most recent lesson, you learned the basics of consumer and business loans. Moreover, in previous lessons, you were taught how to calculate simple and compound interest as well as annuities. So as a review, reading yourself in doing this first activity. So in your first activity, so based on your knowledge of your previous lesson, try solving the following problems. Here there's a given problems. Then you're asked to find something, for example, the unknown variables. And for number one, how much interest is charged when 100,000 pesos is borrowed for 6 months at an annual simple interest rate of 12%? So what will be the how much, no, the interest being charged? For number two, so find the maturity value and the compound interest if 15,000 pesos is compounded annually at an interest rate of 3% in 3 years. And for number three, Rina started to deposit 3,000 pesos quarterly in a fund that pays 2% compounded quarterly. How much will be in the fund after 5 years? And for activity 2, for your directions, identify which of the following statements belong to either consumer or business loans. Write the number of each statement to its corresponding column inside the table below. So for number 1, Maria wants to borrow money from a financing agency for her college education. And for number 2, Man Pedro, or it could be Mang Pedro, so there's a typo here, would like to improve his auto repair shop. He went to the bank to borrow money to finance his plan to buy some equipment. And for number 3, Rico finds it hard to travel to and from his workplace. So he filed a loan from a bank for him to purchase a motorcycle. And for number 4, Mr. Ramsey would like to open a computer shop, but he was short of capital. So he went to the bank and filed for a loan to purchase computers and other equipments. Here, you just simply identify, which of the following statements belong to these consumer loans here in your first column, and for your second column, which is your business loans. So for what's new, so most people think about the security and comfort of their families. Yes, it is. No, we always think for the future and for the security and comfort for our families. So these security and comfort include the provision of a house, and in case of a far workplace, by having a personal car or motorcycle. So, however, a large amount of money is needed to buy them in straight cash. Yes, it is, no? It's very hard for us to buy an instant car with a straight cash. Now, recently, the government implemented a program called the Balik Probinsya. So, Balik Pag-asa program that will provide resources for those who will be coming back to provinces from Manila to start a new life because of the pandemic. So the government offers, no, for those person who work, no, in the city or in the Manila to go back in their own provinces, no, with this Balik Pag-asa program for them to start a new life. This may mean having something to provide for the stability of a family, such as a house or maybe a motorcycle in less amount. A house to provide for the family, shelter, while a motorcycle may be necessary as a means of transportation to report to work. But despite the help the government may provide, this still seems difficult to have if you have no cash on hand. So, you will resort to what we call a loan. So basically in this module, we're going to discuss these business and consumer loans with the concept of your amortization and mortgage. So in this module, we will call it a mortgage. So these are the following questions or guided questions that we can pond on, no, for us to understand more what this module is all about for us. So your first question, what do you understand about the word loan or mortgage? For number two, do you think anyone can file for a loan from a bank or a financial institution? Yes, it is, no, as long that we satisfy, no, the requirements, no, being given to us by a bank or a financial institution. For number three, enumerate some government institutions or private agencies wherein you can apply for a mortgage of a house or any vehicle. And for number four, which do you think is more proper, to buy a motorcycle using a straight cash or using a mortgage, and why? So there are some cases that it is better to buy, a motorcycle with a straight payment than using a mortgage. But there are some scenario wherein it is good, no, in dealing with that what we call mortgage, because so whatever our money, so we can use for some expansion, or even we can build a new business wherein we can earn more money, and we can pay our periodic payment, no, with that type of motorcycle that we want to buy on. And for number five, do you think it is appropriate to pay an obligation such as a loan or mortgage? Why? Yes, it is. It is necessary and appropriate to pay to pay back, no, the loan or mortgage that you applied for. Now let's deal with this. What is it? So you have noticed from the beginning of this module that you were given situations that have real life applications. So basically, this module is all about your business and consumer loans with the concept of your amortization and mortgage. So again, this module is about solving problems in consumer and business loans. So a loan is something borrowed, especially a certain amount that you are obligated to pay fully at a certain period with interest. Yes, it is, no. When your maturity date comes, so it should be principal plus the interest. So for instance, a bank may lend you a capital of 500,000 pesos for your intended business, but you must pay it fully at a certain period of time, for instance in 3 years, with 12% interest per annum. The following examples will help you with amortization and mortgage. But before that, let us learn some terms which can guide you as you study this module. So here there are 8 terms here. For the first term, that will be your amortization. So when I say amortization, it is the process of paying off debt with regular payments made over time. So in business, we can say that your amortization refers to spreading payments over multiple periods. Because if we don't have an enough money to pay our purchase, no, in a straight payment, then we need to deal with your amortization. So the term is used for two separate processes: your amortization of loans and amortization of assets. So in the latter case, no, it refers to allocating the cost of an intangible asset over a period of time. And for the second term, which is your mortgage, no, so it is a loan from a bank or other financial institutions that help a borrower purchase a home or a car. So we can say that this term of mortgage now refers to a loan used to purchase or maintain a home, land or other types of real estate. So maybe the borrower no agrees to pay the lender over the time, and typically in a series of regular payments that are divided into principal and interest. So for example, the property serves as collateral to secure the loan. So a borrower must apply for a mortgage through their preferred lender and ensure they meet several requirements. So including your minimum credit scores and down payments. Mortgage applications, now we can say that these mortgage applications go through a rigorous underwriting process before they reach the closing phase. So basically, your mortgage types vary based on the needs of the borrower, such as conventional and fixed rate loans. So that will be the concept of your mortgage. Now, dealing with your mortgagor, no, your mortgagor is the one who borrows a mortgage. Yes, it is no. By the business world, your mortgagor is that who borrows money from a lender in order to purchase a home or other piece of real estate. Or we can say that mortgagors can obtain mortgage no loans with varying terms based on their credits, profile, and collateral. In mortgage loan, the mortgagor must pledge the title to the real property as collateral for the loan. Now, with your mortgagee is the one who lends a mortgage, no? So basically, is a lender. So specifically, it is an entity that lends money to a borrower for the purpose of purchasing real estate. In a mortgage transaction, the lender serves as the mortgagee, and the borrower is known as the mortgagor. So that's how we deal with this mortgagor and mortgagee. Now, dealing with your collaterals are assets that can secure a loan. Yes, it is, no? In different way, we need to secure for the bank, no, to secure, no, the funds that he made available for the borrower, no, because of the collateral. Even if when time passed by, when the borrower, no, don't have a money to pay back, no, that particular loan, then there is a collateral that will secure the loan. Now, dealing with the fixed rate mortgage. So it is a type of mortgage where interest remains constant. So the term fixed rate mortgage refers to a home loan that has a fixed interest rate for the entire term of the loan. So this means that the mortgage carries a constant interest rate from beginning to end. So fixed rate mortgages are popular products for consumers who want to know how much they will pay every month. So that will be your fixed rate mortgage. Now, with the obligation, it is what the parties may do under a contract or term of agreement, because that will be your a borrower no are obliged now to repay the loan or the mortgage that he applied for. Now, for the outstanding balance for your last term here is any remaining debt no as a specified time. I mean, so that will be your outstanding balance now. Let's deal now with example number one. So aligned to our topic, which is your solving problems involving consumer and business loans. Now, Mario came from a poor family. His parents have no stable jobs, but due to Mario's determination, he excelled and was able to graduate college. After being permanent for 2 years in his work, Mario dreamed of providing a simple and decent shelter for his family. He went to the bank and applied for a 1 million pesos loan. The bank approved his application with the following terms. So it can be 10% down payment, 12% total interest, and must be paid in the full after 5 years. So how much is his mortgage amount? The second question, how much should he have paid after 5 years? So this will be our task, no? There are two questions here that we need to answer. And for our solution, for letter A, your down payment must be equal now to the down payment rate now, which is equal to 10% as you can see and being mentioned on the problem, multiplied by the amount of loan applied. So that will be equal to 1 million now. So we just simply convert your 10% to decimal and by simply dividing it by 100 and to make it 0.10, and we just simply multiply this 0.10 to 1 million pesos for us to get the down payment. So our down payment now is 100,000 pesos. Thus, now, the mortgage amount will be equal to the amount of loan applied. So that will be equal now to 1,000 again, because that will be the amount of loan applied minus the down payment. So now, your down payment now will be equal to 100. So we just simply subtract your 100,000 to 1 million and make it 900,000 pesos. So for the answer, no, in your task number one or for your question number one, how much is his mortgage amount? And that will be equal now to 900,000. And for letter B, so given your P, which is 900,000 pesos, because that will be the principal that he will receive, no, when he get the loan that he applied for. Now for the J, no, that is 0.12% and N is 5. So here we don't need to divide this 0.12 because this is compounded annually. So we don't need to divide it by 12. We just simply divide it by 12 if the given is compounded monthly, divided by 4 if the given is compounded quarterly, no? We divide it by 2 if the given is compounded semi-annually. But in this case, we don't need to divide your j by 12, by 2 by 4 because the given is already compounded annually. Now, for your n, that will be equal to 5. Now, with the concept of this future value or the formula being aligned or designed for your future value, we just simply multiply your principal, multiply by 1 plus j, the rate of interest, no? Aligned to your compounded annually, raised to n, that will be your exponent or the number of conversion period. Since it is compounded annually, it's automatic that we adapt the given value for the number of years, which is equal to 5. Now, we just simply substitute the given values to your given formula, which is 900,000 multiplied by 1 plus 0.12 raised to 5. So if we multiply this one, so that will be equal now to 1,586,108 pesos. And that will be the amount, no, that he should pay, no, after 5 years. So this will be the amount or the future value that Mario needs to pay after 5 years. So therefore, Mario should have paid, no, 1,586,108 pesos after 5 years. And that will be our final answer for letter B. So for example number 2, Kathy finished senior high school in her hometown. She took a TVL strand in dressmaking. However, because of financial incapacity, she was not able to continue in college. She decided to help her mother in their small business of dressmaking. Their business increased in production due to her hard work. Subsequently, Cathy decided to venture on a larger scale and wish to export their Filipiniani-style products. But this would need a bigger capital, so she decides to go to a financing institution, Piram Incorporated, to borrow 500,000 pesos. If her monthly payment is 12,000 pesos on a 5-year mortgage, how much is the total amount of interest? Now, with our solution here, so given your P as your principal, because that is the amount that she applied for, no? That is 500,000 as a value of your P here. The monthly payment will be equal to 12,000. So there's a typographical error here. So this will be 12,000 pesos as the monthly payment, no? And for the total amount, we just simply multiply this 12,000 pesos by 12. That is being converted to, because there are 12 months in a year, and to be multiplied by 5 years because we are dealing now with 5-year mortgage. That's why we multiply 12,000 pesos as the monthly payment, 12 months because there are 12 months per year, and the length of the term is now 5 years. So we just simply multiply it, these three values. So the total amount now is 720 pesos. And for the total amount of interest, we just simply subtract the amount of mortgage to the total amount. So the total amount now will be equal to 720,000 pesos. So if we subtract your P or your principal or the amount of mortgage that is equal to 500,000 pesos, so the total amount of interest now is 220,000 pesos, and that will be the total amount of interest. Now, therefore, the total amount of interest is 220,000 pesos. So that will be the total amount of interest. As you can see here, the total amount of interest is 220,000 pesos. And that will be your final answer for this example number 2. So for example number 3, so during his STEM high school years, Albert was fond of experimenting on RC motors. In his engineering years in college, he creatively thought of experimenting about perpetual motion that could provide energy to machines. However, he was short of finances to start his project, which is primarily Filipino-made. AG Recibo Company approached Albert and offered to lend him a capital of 2 million pesos to be paid in 5 years with 10% monthly interest. So moreover, there is an outright deduction of 100,000 from his applied loan. And our main goal now, how much is his monthly payment? So we're asked to look and to find the monthly payment that Albert, no, will deal with, no. Now for the solution, so your given is 1,900,000 because there is a deduction here which is 100,000. So we deduct 100,000. So by simply subtracting 100,000 to 2 million, so it becomes 1.9 million. So multiply to I raised to 12, that is compounded, no? Because 10% will be applied, no? With the 10% as the interest rate, no? To be applied monthly. Now, in this case, your I now is equal to, I raised to 12 now is equal to 10.10. We just simply convert this 10% to decimal by simply dividing it by 100. Now, for j, now, for the value of your j is now equal to I raised to 12 over 12 because we need to convert this compounded monthly to compounded annually. That's why we need to divide it by 12 because there are 12 months in a year. That's why 0.10 divided by 12, so it becomes 0.008. Now for the n, your m is equal to 12 because this is compounded monthly. Then your t is 5 years because we're dealing now with 5 years contract. So 12 multiplied by 5, that will be equal to 60. Meaning to say that there are 60 months within that 5 year. So that will be the number of conversion period. Now for us to use the formula being designed for us to find the periodic payment, now that will be P is equal to R, no? Multiply by 1 minus 1 plus j raised to negative n over j. So there's a value for R, j, n, and j. No? In finding R, regular payment we use, no? We just simply manipulate, no? The given formula for this one. So it becomes your R is equal to P all over your 1 minus 1 plus j raised to negative n over j. Now, by substitution, we have your R, which is 1.9 million divided by 1 minus 1 plus 0.008 raised to negative 60 over 0.008. Meaning to say, the periodic payment now is equal to 39,996.45 pesos. So therefore, the monthly payment now is 39,996.45 pesos, and that will be the amount that Albert should pay monthly. So for your activity, you're going to write your answer, dealing with your Catleyan notebook. So read each problem carefully and answer each question to solve the problem. So for number one, a business loan of 200,000 pesos is to be repaid in full after 2 years. What is the amount to be paid if the effective rate of interest is 10%? So there's a hint formula here, so you can use this one. So for number two, Jonah purchased a condominium worth 3.5 million pesos. However, the bank demands 10% down payment. So how much is the mortgage amount? And for number three, a motorcycle seller requires Justo with a 5,000 pesos down payment. How much would be the mortgage amount if the motorcycle is sellable at 120,000 pesos? Thanks for watching. So please like, comment, and share, and subscribe.